Friends, greetings from Freedom Factory. Today we are going to talk about some very important subject on housing. Now housing is something that is very close to many people's heart. Property was supposed to be one of the most favored investments, and according to a survey 50% of the investment goes into property. But today we are going to look at what are the implications of this, because it's very important to understand. And secondly, what is the way in which we can plan our taxation in a more beautiful way. So basically in house property there are two concepts. Okay, there are two types of house properties. One is called as an SOP, second is called as an LOP. SOP means self-occupied property, LOP means let-out property. Now please don't get misled by these names, because self-occupied property does not mean the property in which you are staying, and let-out property does not mean the property which you have rented. Yes, so that's very interesting and that's very confusing, but please don't go, it is a misnomer actually. So I want you to very attentively listen to this video, as a lot of new insights are going to come. So SOP is any two houses which you have not rented. Any two houses which is not rented, irrespective of whether you are staying or not, is called as an SOP. In SOP, the income is nil. So government says that two properties are free of income. So the income is nil. What you get as a deduction is, if you are having a flat in affordable housing, then 3,50,000 housing loan interest is allowed. And if it is any other house other than affordable housing, then this is 2 lakh rupees which is allowed as a deduction. But this is not allowed in the new regime. The SOP deduction of housing loan interest is not allowed in the new regime. So therefore, if you have an SOP and if you have an housing loan interest, your income under house property will definitely be negative. But again, there is a caveat that this negative cannot be more than minus 2 lakhs. Only minus 2 lakhs is adjustable with other heads of income. The rest has to be carried forward for 8 years. Now let's come to LOP. LOP means all houses except those two houses which are not rented. LOP means any house other than the two SOP houses which are rented or not rented, which means if you have total 5 houses and out of that 2 houses you take which are not rented as SOP, and if you have the other 3 houses where one is rented but 2 are locked because you don't get a tenant, but as per the government all the 3 houses you have to consider the rent. 2 houses it will be notional rent based on fair rent, approximate rent that is received in that locality. So you have to actually account for everything. You are receiving rent only in one house, but you have to show all the 3 houses, and it has been made compulsory now. But the benefit is that once you show all this as an income, so 2 houses will be notional income which you are not getting right now, but still you have to consider it as income and pay tax on that, which is very painful. What you get as a deduction is you get municipal taxes, which is property tax, can be deducted from this from your LOP income, and you get 30% deduction for repairs and maintenance, which is an ad hoc deduction. Ad hoc means you don't need to show receipts and bills, you get an ad hoc deduction. And the last, the second, third deduction. The first deduction is municipal tax, second deduction is the 30% for repairs and maintenance. The third deduction is unlimited housing loan interest. So there is no cap. You can unlimited housing loan interest can be taken and set off against the income. But again, as a caveat, again, maximum including your SOP and LOP, total, you cannot take more deduction more than minus 2 lakhs as a negative in house property income. You have to carry it forward for 8 years to be adjusted against all the income of the future. For more details, you can contact Freedom Factory to make all these actual calculations for you, which is very important. Otherwise, you may be missing on some tax exemptions. Thank you.